Now on Overnights,
I believe in reason and common sense.
Leith Van Onselen from Macro Business with the Treasury of Common Sense.
Common sense never goes out of style.
So let's get into it. What do you got for us this week, mate?
Yeah, so I basically want to talk about this, Australia's housing market and why it's been absolutely engulfed in FOMO. So if people don't know what FOMO is, FOMO stands for fear of missing out.
Yep.
And it's basically, indicative of how the housing market's going at the moment. So I've got to say, this month or the last several weeks has probably been, one of the biggest shockers for Australian housing affordability that I've seen in the, 15 years I've been doing this. So just last week, 9 days ago, the Australian Bureau of Statistics released data on dwelling approvals. And that's basically, permits to build houses. And that showed that the number of homes that have been approved for construction is falling so far behind the federal government's 1.2 million homes target. So what they did was basically starting 1 July last year, they promised that they'd build 1.2 million homes over 5 years. And that requires 240,000 homes to be built annually. And so we're 14 months into that target period. And so far, we're tracking behind that target by 62,000 homes. So 22% below what their target is. So we're not getting anywhere near that. And also a week ago, Cotality, which is a housing data provider, they released their house price and rent results for September, which showed that housing affordability, which is already, pretty much the worst on record, is continuing to deteriorate at an alarming rate. So home values across the combined capital cities rose by 0.9% in September, and they're actually growing now at their fastest rate in 2 years. Auction clearance rates, they're tracking at their highest rate in 2 years as well. And just yesterday, 2 days ago, Westpac released their consumer sentiment survey. And what that showed is that house price expectations are now running at their strongest level in 15 years. So basically, we've got this roaring market, this roaring bull market at the moment, whereby, home buyer sentiment is tracking at its fastest rate in 15 years. We've got auction clearance rates coming in a lot higher because people are piling into the market, and we've got house prices rising. And last week, the Albanese government, they brought in their 5% deposit scheme for first home buyers. So what that is, basically, starting 1 October, so last week, almost every first home buyer in the country now can purchase a home with only a 5% deposit without needing lender's mortgage insurance. And the way they've done that is the taxpayers or the government are now going to guarantee 15% of virtually all first home buyer mortgages. Now, there are a few property price caps, but it's going to effectively capture almost all first home buyers. And what this policy is going to do is going to basically pour petrol onto Australia's housing bonfire by bringing in a whole bunch of new buyers or buyers that would have purchased, paid lower prices for housing can now pay higher prices because they don't need as big a deposit. And all it's going to end up doing is just pumping up house prices even more. And mortgage brokers and real estate agents, et cetera, in the past week have reported record strong demand from first home buyers. So they are absolutely rushed off their feet. A whole bunch of first home buyers are rushing into the market to try and take advantage of this. And the risk of it, Phil, is that this policy, because it's going to just drive up home prices and a whole bunch of people are going to buy with 5% deposits, it's going to leave future first home buyers vulnerable to negative equity. So if you think 2 years down the track after house prices have surged upwards because of this policy, and you're a first home buyer in 2 years' time and you're purchasing with a 5% deposit, you're going to be paying much higher prices than you would have otherwise without the policy. And you're going to only have a very small deposit, and you're going to be taking out a bigger mortgage than you otherwise would. And as a result, you will be vulnerable if there is a fairly decent size fall in house prices, because you could fall into negative equity, which means that you owe more on your property than it's worth. And because the federal government, i.e. taxpayers, are guaranteed 15% of all first home buyer mortgages, it also means that taxpayers will be on the hook if first home buyers then default on their mortgages, and we've got to make up the difference. And if that's not bad enough, Phil, investors are also piling into the market. So some data came out this week on Google searches for the term investment property. And those have also surged to a record high, like to a level that we've never seen before. And the Reserve Bank of Australia also released data at the end of last month showing that investor credit growth, so investor mortgage growth, is growing at its fastest pace in a decade. So we've got basically first home buyers piling into the market. We've got investors piling into the market. And the property market analysts and insiders have basically said that FOMO has gripped the market. So it's gripped first home buyers, it's gripped investors. They're competing each other for a limited amount of stock. And as a result, prices are absolutely surging. And to add one final insult to injury, the number of listings, so this is the number of homes listed for sale, they're tracking well below average. So they're down, they've fallen about 16% in the last year. So we've got more buyers, first home buyers, investors chasing fewer homes. And all that's going to mean is that prices are going to surge even higher. They're already at the most expensive level in history. The average dwelling value in Australia is now $1,035,000. It is absolutely absurd. And yet we've got, partly because of the federal government's stupid 5% deposit scheme, we've basically got housing bubble-like conditions developing, being fueled by lower interest rates, shortages of stock, first home buyer stimulus, and now investors piling in on top of the first home buyers as well, competing with each other, bidding prices up. So it's an absolute shocker there. But it gets worse because at the same time as Cotality reported their house price, house prices are rising at the fastest rate in 2 years, they also reported that rents are also starting to surge. So, Cotality this week, a few days ago, released its quarterly rental review, and it showed that nationally rents have increased by $200 per week, roughly, or 44% over the past 5 years. And as a result, the median Australian tenant is now paying around $10,500 more per year to rent than they were at the start of the pandemic. And they've also estimated that the share of income that renters are spending to pay for rents is at an all-time high. And meanwhile, the nation's rental vacancy rate in September collapsed to a record low of just 1.5%, which is around half its pre-pandemic level. And as a result, asking rents, so advertised rents, are now starting to accelerate again. And the total number of homes in Australia that are listed for rent have also fallen to a record low. They're down around 30% from the pre-pandemic level. So we've got a complete shortage of rental stock. The rental vacancy rate's at an all-time low, and we've got rents now starting to surge. And unfortunately, this collapse in the rental vacancy rate appears to be driven mostly by this resurgent net overseas migration that we've got, because in the first 7 months of this year, the ABS reported that the monthly net permanent long-term arrivals figures were the highest on record. So that suggests that net overseas migration or immigration has picked up again. And as a result, we've got more people coming into the country chasing fewer rental homes. And as a result, rental vacancy rates have collapsed, and now rents are accelerating again. So it's a real, terrible situation we've got here, whereby house prices are rocketing or about to rocket, and rents are now climbing again after they've already climbed by 44% over the past 5 years. So this is just a really diabolical situation. It's diabolical if you want to purchase a house. If you're a first home buyer and you want to get off the rental market and purchase a house, you're going to be competing with investors and other first home buyers, paying exorbitant prices. Basically, you'll have to take out a mega mortgage, and then you'll have to pay that mortgage off over decades, and it's going to take up a lot of your income. Alternatively, if you choose not to purchase and you're stuck in the rental market, you're facing a situation whereby you're facing the most competitive rental market almost in history, with record low rental vacancy rates, hardly any rental homes actually listed for rent, competing with oodles of new renters coming into the country every year through the high immigration program. So you're really stuck between a rock and a hard place here. And this is really bad news, especially for first home buyers, because just about every first home buyer starts off as a renter. So, you typically leave home, you rent out a property, you might live in a group house or you live with a partner, whatever. And while you're renting, you need to save up a deposit. But if you're spending more on rent, it takes longer to save that deposit. Meanwhile, house prices are rocketing and getting further and further out of reach. So the housing affordability situation in Australia is absolute debacle. And unfortunately, the federal government's own advisory council on Housing Supply and Affordability. They're called the National Housing Supply and Affordability Council. They've forecast that Australia's population growth is going to be above new housing construction for the next 5 years. And as a result, the housing shortage, they estimate, is going to worsen by another 79,000 homes over the next 5 years. So the upshot here is because of, idiotic policies like this 5% deposit scheme and our excessive immigration policy, house prices and rents are basically going to become less affordable and more expensive. And this is just an absolute disaster.
Wow, you're right. That's incredible, isn't it? Where can people find the details about this, mate?
Yeah, mate, they can go to macrobusiness.com.au.
And thank you, by the way, for giving a lot of people the actual meaning of FOMO, because there's a lot of people out there who've probably heard that word or that term, never actually understood what it meant, and now you've also broken that down for them, so they'll finally be, they'll understand the zeitgeist.